support from Penny. And now, without further ado, I'm going to pass the mic over to Anna.
Thank you. Hi, everyone. This is our third meeting in this series about Principal Business Solutions. I am the regional wholesaler for the Northwest region, or any agents that are under Penny. So today, this is all about key person insurance, how to sell it, how it works, what the illustrations look like, and the tools we have for it. So our business market solutions team gives you everything you need to find success in prospecting and selling in the business market. We offer over 30 complete solutions, lots of experience between our advanced market, wholesaling, and underwriting teams, and ongoing administrative services. So let's talk about key person insurance. Why would a business need this type of insurance? It helps to protect them when a key employee dies, becomes disabled, or leaves the company. By using life insurance for key person, there's the death benefit protection and potential cash value liquidity for a financial cushion to help the owners in case they want to recruit a new employee, to help hire, and to help train. So with the insurance or without, there's going to be costs of losing a key employee. And by having the protection in place, it helps the business not have as big of a financial or operational hit. Every organization incurs costs like the contractual benefits for employment contracts, the cost of healthcare, disruption to management or operations, revenue loss, loss of skill and expertise, or of reputation, recruiting power, client relationship. It can impact a wide array of things if you lose a really important person. The challenges for a business when they do lose a key employee is finding a replacement, the time frame, especially depending on the event, whether that's a death, disability, or departure. These are often unpredictable and unexpected. To meet the outstanding obligations, maintaining business continuity, and protecting the relationships both internally and externally. Every year, Principal does a survey of lots of businesses around the United States to identify business owner priorities and different industries, company sizes, to see where these things are selling. So this most recent year, as you can see on the far left side, is the key person life insurance. So the top 5 industries were professional, scientific, and technical services, construction, manufacturing, finance and insurance, healthcare, and social assistance. So as the agent, just think about your book of business and who you might have in those industries, what business owners might be in your book of business, to see how you can help assist them with these kinds of plans. 55% of these have 24 or fewer employees, and 63% are established businesses, so they've been around for over 10 years. And you can see the average sales volume is typically under $3 million. Principal specializes in the business space, but particularly in the small to mid-sized business space. So our plans are fit for business owners at this scale. How do you help a business owner have the conversation on determining the difference makers? Or we like to call it the people that are mission critical. Like if they left, that it would have a significant impact on the business. So who are the people that have a major impact to operations and workflow? They're relationship managers or have a direct impact to sales and profitability. The way that this life insurance works is the employer would take out a policy on the key employee. So the employer is paying the insurance premiums on the covered employee. And then in the case that the employee were to pass away, the death benefits would go to the employer as the beneficiary. So if a company has 5 key employees, this would be 5 different policies, all of them, there's the individual, they go through underwriting, they have an individual policy, and all of them, the employer is the beneficiary. Potential uses for this benefit. It is just a lump sum of money if they receive the death benefit, and they can use it totally at their discretion. So these are just some of the ways that this money could be used. It could be replacing lost earnings, maintaining business credit position, giving them a financial cushion, helping offset lost business value, to help recruit, make survivor income payments, funding the buy-sell agreement or a stock redemption agreement, and it could also be used for funding a non-qualified retirement plan. I mentioned this previously. We have a tool that can help you determine the amount of coverage that would be needed, whether it is an owner or a key employee, and I'll be getting into the sample outputs for these reports. So in this output, this was for a business owner. So as you can see, there are over 51 employees, 1 to 5 key employees that are impossible to replace. And then we'd get their compensation information. Because they're an owner, we would need to know the business succession needs. So that's the estimated business value, percent of ownership, business debt, and then if they have any other business needs. So by looking at these 4 different areas, we were able to get this range of coverage. So base level is 3 times income. That is the minimum that we would suggest for key person coverage. And then when we add in these other aspects for succession and additional coverage, the minimum amount of coverage recommended for this owner was 6.5 million. And then we have 2 more levels. The second level would be the 5.5x, and then the high level is 8.5. So this ranges from 6 million to almost 9.5 million. And this can be determined by the owner's comfort level with doing this kind of a plan, the budget for the plan, how long it should be in place. And this can vary based on the duration of the term they pick, or if they do a permanent insurance option, how much money they're using to fund the plan for premiums to get to a certain amount of cash value or death benefit, and how flexible that is. So by working through this report with them, you're able to use this as an aid in the conversation and then get to what they really need. This next output is for a key employee. So in this case, it's a sales VP. And they have the $200,000 compensation. For an employee, a non-owner, the multipliers are 3 minimum still, or 4.5 for a moderate level of coverage, and 7 for a high level of coverage. So the range for this one is 600,000 to 1.4 million, much lower than the owners because they don't have a share in the company, and it's purely based on their compensation. Funding options for this insurance is we can use life insurance, sinking fund, or cash flow funding. Owners are using many different tools over the life of a business to finance unexpected expenses. So it's good to have a variety, to have the cash flow, but it fluctuates a lot over the years. It can go up and down. Sinking fund would give the liquid assets, but it might not be sufficient in early years because it needs funding and time to grow. So having life insurance is the most stable. As you can see, we have the straight line for life insurance. It's lower risk, guaranteed protection, and there could also be the cash value aspect.